Good morning, this is latest market news. I'm Uliana. Asian shares fell in morning trade in a holiday-themed week. Japan shut Tuesday for show day, and most of Asia at home Thursday for Labor Day. The Nikkei 225 lost 1.15% as the yen strengthened after data showed March retail sales rose 11% year-on-year, in line with expectations and the 8th straight annual rise. Sales have been boosted by buying ahead of an increase in the sales tax to 8% from 5%, effective April the 1st. The Shanghai Composite was down 1.23% and the Hang Seng Index fell 0.39%. US stocks slid last week with the Dow 30 down 0.85%, the S&P 500 index off 0.81%, while the Nasdaq Composite Index fell 1.75%. Tensions in Ukraine continue to roil markets after Ukrainian troops killed several pro-Russian rebels on Thursday. Russian troops meanwhile conducted military drills close to the border between the two countries, which frayed nerves even more. In response, US Secretary of State John Kerry said Washington was moving closer to slapping fresh sanctions on Moscow, which steered investors away from stocks into safe haven positions, and yen gold especially. US dollar Japanese yen traded at 102.11, down 0.08%. While Australian dollar US dollar gains to 0.9280, up 0.12% from a slow early start. US pending home sales index 14 GMT. The housing market is the weak link in what appears to be a revival in US economic growth generally. Construction activity has been flat to slightly higher lately, while sales of new and existing homes continue to slide through the first quarter. Yet modest and stable mortgage rates in the low 4% range so far this year, and strength in other areas of the economy, retail sales and industrial output, for instance, suggest that housing is still likely to deliver modest, if not particularly impressive growth in the foreseeable future. The consensus forecast sees index rebounding a bit in today's release. If the forecast for 0.6% monthly rise still holds, it will be the first gain since last June. It was the latest market news provided by ICO FX. Goodbye.